Saturday with Leith Van Onselen, the man at macrobusiness.com.au that preaches common sense around economic issues. Chief economist at the MB Fund at MB Super. He's on the line. Leith, greetings.
G'day, Luke. How are you?
Very well indeed. Through the week, we got details out of CoreLogic about the Australian housing market or crisis, as you rightly put it. I was amazed with this. The housing stock at 11.3 trillion as of March 31 this year. That's, again, according to CoreLogic, means the average home is worth $1 million.
Yeah, that's right. Actually, it's it was that as of March 31, also the same as of April 30. I should have updated those figures, but yeah. So Australia's housing stock. So we're talking about if every single apartment, townhouse, and house across the nation. So we're talking, the back arse of I shouldn't say that. The back of Buggery,
yes,
and Sydney. The whole of Australia.
Yeah.
The average dwelling price is. Well, the average dwelling value is now $1 million, which is just extraordinary, expensive housing when you think about it, given it includes regional areas, the cities, apartments, everything. And, CoreLogic also last month released their housing affordability report, which showed that housing affordability, whether you want to buy or rent, was at the worst it's ever been at the end of 2024. So basically, households were required to a record share of income to service a new mortgage, a record share of income to service the median rent, and also dwelling prices. So home prices were the highest they've ever been relative to incomes. So, whether you're someone who's looking to buy a house or looking to rent a home, it's an absolute shocker. And obviously, when you have an average dwelling price across the nation of $1 million, it tells you that there's a problem.
So the answer often put by those in power is supply. You and I both know it's not that easy, is it?
No, it's not. And certainly I'd argue it's more about demand. So Australia has had the strongest population growth through immigration in the advanced world this century. So since we rang in the year 2000, Australia's population has grown by 8.7 million people. That's 46%. That's the largest percentage increase in the advanced world. Now, obviously, if you're going to add 8.7 million people in about 24 years, that's going to create a hell of a lot of housing demand, and we just simply have not been able to build enough houses, enough infrastructure or anything. I bang on about this repeatedly, but the fact of the matter is, all these people keep trying to say it's a supply problem, but 8.7 million, 46% population growth in 24 years, and the official projection, Luke, is for the population to grow by another 13.5 million people in the next 40 years. Now that's the official projection from the federal government that came out in December, and that is the equivalent of adding another Sydney, another Melbourne, and another Brisbane to Australia's current population in just 40 years. Now, just visualise that. All the houses, all the infrastructure in Sydney, Melbourne, and Brisbane will need to be recreated in the next 40 years if we're going to keep up with the population growth, which is just an impossible task. It cannot be done. And as a result, we're just going to have a persistent housing shortage and a housing crisis, both to buy and rent.
Yeah, gosh, and just if I might say, on the back of commentary like that, which is just common sense and about mathematics, people who conclude that's racist or are hurt by the idea of we're going to slow down demand, wake up to yourself. It's people like you who vote, who give us the cost of living crisis that we now have to endure, perhaps a lot longer than might otherwise be the case. Just on the construction sector, I mean, we hear about the increased cost of goods. We hear about the restraint caused by a lack of workers, skilled workers. They're things that aren't going to be fixed anytime soon, surely.
No. So unfortunately, since the pandemic, we've seen construction costs. So this is the cost of building materials and that sort of thing, has gone up 40%. And as we know, when prices of things go up, they rarely come back down. So, we might have, low inflation in construction materials. All that means is that the price isn't going to increase as quickly, but we've already had that 40% increase. And that means that it's become a hell of a lot more expensive to build new houses, new homes, I should say, houses and apartments now than it was before, which means you're going to get less of it. At the same time, we've got labour shortages because all the state governments are trying to frantically keep up with this population growth. And they're building out, all this infrastructure. We've got this so-called renewables transition where we're supposed to be building all these wind farms and all this other stuff, which all needs to be connected, which requires heaps of construction workers. All it means, and we've also seen record bankruptcies amongst in home builders. So we've got less capacity to build homes going forward, which means we're not going to build as many of them. And all the construction data that's come out from the Australian Bureau of Statistics shows that we're tracking about 30% below Labor's fantastical 1.2 million housing target, which has been in operation for 9 months. We're supposed to build 20,000 homes a quarter or 20,000 homes a month, 60,000 homes a quarter, but we're running nowhere near that. And we just can't while we have these constraints in. And so the notion that you can just keep growing the population like a science experiment through high immigration and grow the population by 13.5 million people in the next 40 years is just ludicrous when you consider that we just cannot build enough homes or infrastructure or anything else to accommodate all these people. It's just common sense.
What happens when the RBAs are predicted to do moves downwards with interest rates maybe a couple of times or more at the back end of this year? Does that not just with expensive homes get more people into debt? I mean, how does that end?
Yeah, unfortunately, I think the house prices are going to boom, Luke. It's unfortunate for me because I've got 2 teenage kids, so I'm worried about their future. But obviously, if you're a property investor in your own property, you're going to be pretty happy about hearing about that. So the financial markets and, a lot of economists tip that the Reserve Bank's going to cut interest rates 4 more times this year, so another 1%. And obviously, whenever interest rates are cut, you boost borrowing capacity, buyer demand, and you end up putting upward pressure on prices. That's pretty commonsensical. But added to that, Luke, Labor's actually implementing a whole bunch of policies just to inflate home prices further. So during the election campaign, they promised all first home buyers from January the 1st next year will be able to buy with a 5% deposit with no lender's mortgage insurance or anything. And taxpayers will actually guarantee 15% of all first home buying mortgages from next year. And what that means is that, first, we're going to get a lot more borrowing, a lot more demand from first home buyers that previously wouldn't have been able to buy. That's going to lead to higher debt, high upward pressure on house prices. Labor's also instructed lenders to ignore student debts and loan serviceability calculations and compare the market. Did some analysis saying that if you're on $100,000, you'll be able to borrow $56,000 more now for property. Or if you're on $125,000, you'll be able to borrow $95,000 more just because of that policy. Labor's also expanded its shared equity scheme for first home buyers, which will provide 10,000 first home buyers with 40% of the purchase price from the taxpayer. So effectively, if you want to buy a house, you can buy it with 60% and the government loan 40%. That's going to bring more people into the market. It's going to push up prices. And finally, their unrealised capital gains on super, which they've proposed is just going to end up pushing more people out of super, like high net worth people out of super and probably into property because they're going to move some money out of super and they're going to invest it somewhere. So they're probably going to invest in the property market, which is going to put more upward pressure on property prices. So this is just an absolute perfect storm for the housing market. You're going to have low interest rates. You're going to have Labor's demand pumping policies pushing up prices, making housing even more expensive. They're already valued at average of $1 million a piece. Well, they're going to go a lot higher than that. And Louis Christopher from SQM Research is a very smart guy and a very, very good forecaster on housing. He forecasts that property prices could jump 8 to 15% next year, just after Labor brings in its 5% deposit policy, and that's going to be mostly in the sub $1 million bracket, which is where most first-time home buyers buy. So this is just a housing affordability disaster if you're looking to purchase.
Yeah. But
if you're looking to rent, when you got bottleneck construction and ongoing high immigration, well, it's going to be a shocker for them as well. So, this is just an absolute bomb, a cluster. You know what?
Yes.
If you're looking to purchase in the future, or you're looking to rent, because you're just going to have this upward pressure on home prices and rents.
Yeah. Thank you, mate. Macrobusiness.com.au. We'll talk in a week's time, Leith. Thank you.
Yeah, cheers, Luke.
Good man, Leith Van Onselen. So Louis Christopher, as Leith says, is a respected observer in this area, and he is. I used to interview Louis a bit when I was hosting Money News for that period a year or two back. He says prices could next year rise 8 to 15%. How's that going to help old mate housing crisis? I don't know. I mean, you hope these things are inaccurate, but they're too often accurate. That's the problem.